All right, everybody, welcome back into Mining Stock Daily, moving right along with all these corporate updates we have scheduled over the next few days. And right now we're going to touch base with our friends at Minera Alamos. They do trade on the Venture Exchange with MAI and on the OTCQX with MAIFF. Happy to welcome in Darren Blasutti. He's the EVP of Corporate Development here with the company. Darren, it's been a little while. Good to see you. How have you been?
I've been great, thank you. I've been busy, but things are going in the right direction, Trevor, so we're happy.
Yeah, absolutely. Very good. The stock's up a little bit, 10 cents today as we speak on this Wednesday afternoon. The latest news comes out actually of your balance sheet and executing a term sheet for a revolving credit facility, ScotiaBank and National Bank, for $75 million US. Darren, break this down. I got to admit, this is well beyond my pay grade, so you're going to have to talk to me like I'm 12. But give me a sense of the importance of this.
Well, I think three or four things to focus on here. One, as a producer and with the strategy of getting pan, is that we're now starting to see our cost of capital lowering. From the sense of, when small companies with limited balance sheets do things, you're paying 12 or 13% on the money that you're borrowing. We're now talking about a number that's either slightly below or slightly above 7%. So I think the first thing is you're seeing cost of capital for the company starting to come down as a result of it being a producer. Second thing, and maybe more importantly, is we're now fully financed so that we can build Copperstone and start building Gold Rock this year. So I think from that perspective, as we've talked about a number of times on this show, we want to be able to build our three assets out going forward, which are Copperstone, which we expect to update the market in the next couple of weeks, Gold Rock in the fourth quarter, and then Cerro Doro next year. We can build all three of those lines from within cash flow and without any equity dilution. So that's been the prime feature. So the money that we have and that we've got now, which, as we said at the end of the first quarter, was 34 million or so, that number will go up significantly quarter over quarter. And then we will have this $75 million, which is in a revolver. And Trevor, likely what we'll do is we'll draw around 40 million of that, maybe a little bit more. And we're going to basically take out the expensive capital that was raised on the deal in August, or announced in September, from Oramet, which have been a great help to the company over the years. But again, we're transitioning from Oramet to two tier one banks, and so that's going to allow us to get rid of all those prepayments that were out there, those 7,830 ounces. So that when we deliver gold at the end of April and the end of May and the end of June for the next 15 or 18 months, we'll be delivering that gold at spot prices instead of at zero. So that cleans up we'll clean up the entire position with those prepay option ounces, 7,030. It will also help us. There's a few thousand call options left from the old call option document, which were at 2175. We'll be able to clear those up in the quarter. And we're going to be able to go forward with a very clean balance sheet with the only debt we're going to have, our trade payables at PAN on a quarterly basis, and this 3-year revolver that is not requiring any principal repayment until 2029. And so that's exciting, because when you match the cash flow of the projects with the debt, we'll be easily able to pay that debt off. And usually you don't pay debt off, you just extend it. If we have bigger projects to build, you look at how you're going to manage it. But for now, so the second point is we're going to be able to basically pay off all of that complicated stuff on our balance sheet that is not allowing us to have 100% exposure to gold. All of that by the end of the second quarter will be gone off the balance sheet, and we will just be producing gold at current prices. The third thing is it gives the sense for our listeners, and for the people that follow the company, that two major Canadian banking corporations have done full due diligence on our plan, not only at PAN, but at Copperstone and at Gold Rock. And they're saying, we like this plan so much, we're prepared to give you $75 million. That is not something that would have happened to this company at the end of September when this deal was announced. And so we've
Right.
transitioned from not only a producer, but to a company that can do detailed due diligence with banks, and the banks have confidence in our development plan going forward. I think that's a very key part. So if you look at cost of capital is lower, all the capital that we need to build our mine, and our mines, getting rid of those call options and prepaid options gone off the table, ounces off the table, and finally, knowing that two tier one Canadian banks have done due diligence on us, and we're happy to give us $75 million.
No.
And I think
Uh,
that number. Sorry, go ahead.
no,
U.S.
sorry. I'm sorry to interrupt. That's a very thorough summary. In fact, I'm going to attempt to try to dig into this a little bit
Yep,
more thoroughly, Darren. But well done, describing everything. But I think let's talk about the heart of it. This is a very different company than it was a year ago. And so my question really is, with the $75 million revolver, this is a big setup. Is really that acquisition of Pan becoming a bona fide producer, is that what changed in the business that allowed you to access the traditional bank financing at this scale today? Doesn't seem like something that could have happened a year ago.
absolutely. I mean, again, first thing is positive cash flow from Pan. And as we said,
Mm-hmm.
we trade at 0.6 times Pan at the current gold price. So forget all our other assets. We don't even trade at 1 times Pan value yet. So the Pan cash flow helped. And second of all, the relationships of the new people that came into the company that have experience with bigger banks and bigger companies has helped, I think, as the second part. So the first part, of course, was getting Pan and getting the cash flow, but there's no chance that Scotia or National Bank would have ever looked at the company, pre-Pan acquisition.
Yeah. Well, you just kind of answered my follow-up question here, and I want to go back to that Auramet gold prepay. So this facility removes that, but do you feel the market has really digested the importance of removing that forward delivery obligation and regaining full exposure to the spot price, or is the market still kind of sleeping on this?
I think, listen, again, it's the concept of when you're a new company with a new group and a new voice. I think if you looked at some of our analyst coverage, they talk about that the free cash flow for the year is up now 20%, 15 to
Mm-hmm.
20% as a result of that. That means it's up again in 2027 as well. So, and again, there's a bunch of reasons for doing that, right? We could have just delivered, we had the cash flow. But if you're trying to build Copperstone and you're trying to build announce Gold Rock at the end of the year, you want to build those so that we can show this, hockey stick growth that we're going to have in 2027. We've got to have the money available to us. And so that's what this gives us. And I don't, again, because we haven't come out with the Copperstone technical study and how many ounces it's going to be next year and the excitement around that. So I think I view it, Trevor, as a bit of a building process, right? But what we're doing is we're
Mm-hmm.
getting our blocking and tackling in place to be able to announce these new mines, and nobody has to worry about. I think there's been an overhang on the stock, quite frankly, because people thought if you're going to build these mines, you're going to need to raise equity. And we've now proven that we're not going to have to raise equity. And when people see the
Mm-hmm.
final capital cost number of Copperstone, you're going to know for sure that we're not going to need to raise equity because we're going to have that much cash, hopefully, on the balance sheet. Never mind the debt. And then when again, get to the fourth quarter. So I just look at it as building process, right? People have to
Mm-hmm.
get confident with our ability to deliver the things that we say we're going to do. If you look at our corporate presentation, we have a page of what we've done since we started. We have a page of what we're going to do month by month, quarter by quarter. And our job is to just execute on those things. And then we think the shareholder appreciation and value for our shareholders will come once we do those things. And on the back of, going to Zurich next week and a successful big marketing campaign in London next Thursday and Friday. And then we'll have our results out for Pan in the first quarter. Next week, we'll have our financial results out before the end of the month. And then we'll have the Copperstone announcement and decision kind of at the end of the month, beginning of May. All of these things are accumulating to where people wake up and go, this company is going to produce 80 or 90,000 ounces in 2027. And it's going to produce 120 to 140,000 ounces even without Ceradoro. And so I think
Mm-hmm.
we try not to get disappointed internally. Dave and I have always been buyers of the stock. We've been blacked out for quite a period of time, given all the things going out. So we're a little frustrated that the stock's not moving as well as we'd like. But again, we've had such big macro issues going on in the world. It's hard to blame people as to whether they want to be where they want to be right now. But we think gold price goes up, gold price comes back 20% or 25%. We've got incredible cash flow growth and incredible production CAGR. In fact, we've done in our new presentation, we go to Zurich, is going to show that we're the highest free cash flow return, free cash flow per share of any company in our space. And so we're excited about that. We're excited to get some of these new analysts come on. We've got 3 analysts. We've got Scotia coming on in the second quarter as an analyst for us. Again, we're getting from this small company to this big company. We're going to rebrand into more of an American-based company. As you know, we're going to have assets mostly in the United States. So all of these things, I think, are building blocks, Trevor.
Yeah, very good. I told you I wasn't going to keep you very long, so I just have one last question. It's more of kind of a big general thing of really what this deal perhaps represents, and maybe I'm stretching it too much, but do you see a broader market shift here where mid-tier producers or smaller producers can increasingly access bank capital again? A lot of these institutions, they didn't want to touch mining and operators. It was too risky. But how does that mean for junior and mid-tier companies financing themselves going forward? Do you see any shift happening in front of our eyes?
Well, again, I think for sure there's a shift to lower cost of capital because people got to compete. I think, in this case, National Bank's been down market for a number of our peers, Integra and Andean and a lot of guys. This is a real shift for Scotia, which is interesting because maybe the BMOs and the Royals and the Scotias and Scotia's shifting because of our growth profile. It's not shifting because they want to be in, $400 billion US market cap companies. The combination of you know what I mean? Like that's not their bread and butter. Right. But they're looking at who's going to create the next companies, who's going to be the next mid-tier. So that's where I think banks are coming down and looking at high quality producers who can say who are going to be the next Centerra, the next. I mean, I-80's got $1.6 billion market cap now, and National Bank went down to those guys at a $300 or $400 million valuation, and they've restructured that company, and now it's much bigger. So I see that's what Scotia and National Bank are looking at with us. It's not just the fact that we're a producer. It's the fact that we're a producer with growth in the right place, and that growth is clearly attainable to them in front of us. I think the rest of the market, not just the banks, I think everything we're seeing, we saw lower cost of capital from the Sprots of the world and the Converts of the world, lower cost of capital from Warmet, because as higher gold prices go higher, people have to be more competitive because there's more avenues to finance, right? And so, yes, there is a shift. I think in our particular case, I don't think you're going to see Scotiabank do 4 other junior deals of small companies with a little bit of cash flow. I think they're in it for the growth, just like Dave and I and the management team are here and our new investors, right? They're in it for what we can deliver on the growth side.
All right. Well, don't single out your humble host, who's also in it for the growth, as I remain a shareholder of the company. So, Darren, thanks so much for the update. Safe travels. All the best to you while you're on the road marketing in Europe. Always a grand time, and I think Europeans are going to be knocking on the bit to be finding some good gold royalties, especially good producing ones. So, best of luck. Thanks so much for your time.
Thanks, Trevor. Appreciate it. Have a great day.
The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.